Shares of Huntington Bank shares closing higher today after reporting first quarter results this morning. The company highlighted growth in loans and deposits and net interest income expansion. This comes as regional banks posted their best week since January. So joining us now is Huntington Bank Shares CEO Steve Steinauer. Steve, welcome to Overtime. It's great to have you on.
Terrific to be with you, Morgan. Thank you.
So let's start right there because you saw first quarter profit up 26%. We just talked about it. Net interest income up 11%, strong loan and deposit growth. And perhaps most notably to me, given how much talk we're engaged in here on CNBC about the uncertain economic environment, is the fact that you boosted your net interest income forecast for the year as well. What's giving you the confidence to do that?
Well, our net interest margin expanded nicely during the first quarter. We expect to hold that at roughly the current level, which is higher than the prior forecast. Also, our loan growth has been exceptional during the quarter. Our deposit pricing has also been strong. Fees have been strong. Charge-offs have been below forecast, below expectation. So we're sort of hitting on all cylinders. And as we come into the second quarter, we've got a confidence in that quarter. As we talk to our customers, you know, this is a challenging time for some, but not all. And there are some businesses that are actually going to take advantage of this and I think it perhaps even perform better.
What are the types of businesses? And I ask this knowing that you do a lot in the SBA space. So you're working with and lending to a lot of small businesses across the U.S. Who do you expect to take advantage?
Well, many of these smaller businesses, in fact, don't export or import. They're not into heavy metal bending activities where you have uncertainty or significant increases in like steel or aluminum prices. So those businesses should perform very well going forward. You know, for years, probably 5 or 6 years, we've been hearing you can't get enough labor, chronic in all markets and types of businesses. And so there's an equilibrium that we're adjusting to. And I think over time, what's happening with the tariff discussions, the end result being fair trade, will be really helpful for many of the manufacturing and other larger businesses that we have here in the U.S. Obviously, where we are in the Midwest, there'll be a reshoring dynamic that will benefit us. But we additionally expanded into Texas and North and South Carolina last year. I was talking to one of our advisory board members just minutes ago who's in the construction business in South Carolina. He said it's never been busier.
It's interesting to hear that. It's a different take than what we get, I think, sometimes on the coasts or even from some of the big bank CEOs who, my read through on what you're saying right now, sound a bit more cautious and have been talking about rising risk of recession. I don't hear that coming from you to the same level right now.
Well, there are varying scenarios that we all model to, and a recession, a mild one or even a sharper one, is something we look at. But we don't see that as a necessary outcome or a likely outcome at this stage. We think there's a lot of strength. Again, the unemployment rates are still very, very low by historical standards. And interest rates, although they're up from the all-time low, they're still at relatively attractive levels as you look back over time. And again, a number of businesses are doing very well. I mentioned that construction firm. Many of these are working with multi-year backlogs. There are a number of other businesses that are doing well. I think some businesses have paused a bit. And so as we proceed in the year, we'll see their demand return.
What are you seeing on the consumer side? You have a big book of auto lending, for example. We've been talking, you just mentioned deposits and the fact that charge-offs have been lower than you expected.
Right. So we've been able to grow deposits sequentially now for a number of years. First quarter was very good. Deposit pricing was favorable on much of our portfolio of deposits. We expect to continue to do that. The consumer has been sort of in a bifurcated world. If you're a lower or more moderate income consumer, probably for the last year and a half as rates ticked up, you've been feeling pressed. And so we have a lot of empathy for them. There's a lot of support that we try to provide to them. We as Huntington and certainly our industry. But there's also a large segment of the consumer population that's doing just well. In the Midwest, there's a housing shortage. There's more demand than there is supply, as one example. Autos had a very good month in March. Maybe some of that was pre-buying. We'll have to see. But our consumer delinquencies are holding in very nicely. And the consumer generally looks good for us. Some reduced transactional activity. But as we look at our card business, but it's off a couple of percent, and it could be seasonal in part.